Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Billy Hult, CEO of Tradeweb. Billy, great to see you. Thanks for joining us.
Andy, thanks so much for having me on.
All right, so what does Tradeweb do?
Good question.
Okay.
Most people think about sort of the stock markets when they think about the overall global markets. The stock market's pretty interesting. It's a very electronified market. Anyone can kind of open up a brokerage account, look and see what price a stock is priced at, and then either buy that stock at the price or better. The bond market has always been more opaque, more complex, less electronic, more relationship-oriented, and more voice-driven, more paper-oriented. And Tradeweb has been really the kind of leader at the forefront of electronifying, sort of modernizing the bond market. And we started off on the institutional side, connecting firms like BlackRock to JP Morgan, PIMCO to Citigroup, and started off, not surprisingly, in the most liquid part of the bond market, the government bond market, and we've been on this, pretty big expansion tour since, going from government bonds to mortgages to credit to global swaps. Having fun doing it all the way. It's sort of the movement from liar's poker back in the kind of 80s and 90s to a more modern, efficient, algorithmic market today.
It's funny you mentioned liar's poker. I was thinking of another book, Billy, which is Bonfire of the Vanities, where the protagonist was a bond salesman.
Right.
Does this mean the end of the great Wall Street bond salesman?
It was the master. Sherman McCoy was sort of the master of the universe. Mm-hmm. And essentially what kind of Tradeweb does is automates the flow. It's not the end of the salesperson, but it's the end of the salesperson doing basic kind of activities, standing in between his account and the trading desk, and really putting that salesperson in a more value-add position where they're doing more complex type of activity. But it's been an interesting run because, in a lot of ways, technology continues to drive these markets in a way where they're more linked, than ever. And Tradeweb has operated under the assumption of sort of more leverage is better, and we are kind of the one-stop shop for a lot of firms to access these more sophisticated areas of the marketplace.
Now, you're publicly traded, but you have a controlling shareholder, LSEG,
Yes.
London Stock Exchange Group.
Yes.
Interesting history of the company. Why don't you take us through that a little bit?
We were a private company from way back when. There aren't a ton of examples of, companies that were private for the, most of the history, of us. We're now a public company, believe it or not. I have to amaze myself at how fast time goes. We've been a public company now for 6 years. In those 6 years, we've doubled our revenue as a company, with more than 50% of our growth really coming from areas that we were not as most known for. So Tradeweb was a rates platform, kind of mostly focused on government bonds and interest rate swaps and markets like that. And over the last bunch of years, we've really distinguished ourselves really as a company heavily involved in credit, expanding into emerging markets, and also playing a very kind of significant role in ETFs. Aren't a lot of examples of public companies that have controlling shareholders. Amazing for me as CEO to have the kind of relationship, the constructive relationship we have with LSEG. They obviously have a great Refinitiv business. We've done very good market data deals with them. The market data piece of the market is very, very important, both as sort of the key to transparency around the businesses that we're in, plus it's becoming a larger role in terms of almost the energy or the fuel around the transactions. The market has become so much more sophisticated in the last few years. Maybe some of that is on the kind of heels of, obviously, time goes by fast. It was 5 years ago with COVID, but the market really changed a lot, went a lot more electronic, during the work from home period of time.
Yeah, it's interesting when you talk about LSEG, which is a diversified company. I mean, the London Stock Exchange is a tiny piece of the business now. Why, Billy, hasn't the New York Stock Exchange or NASDAQ gotten into this? Why didn't they do this?
Probably had a couple chances to do it. A lot of it can be just opportunistic moments. I think LSEG, did a really nice kind of strategic pivot, getting into the data and analytics business, and then ultimately, through us, really strong access, into the fixed income markets. I know, I'll make you laugh. I know Jeff Sprecher, a bit. I'm not sure why he never got into kind of our world. I would imagine, as well as he's done, he probably thinks to himself that was an opportunity missed at some point in time, but they obviously have a great business there too.
Yeah, interesting. You've done a lot of acquisitions. You mentioned growing into areas that are beyond fixed income. Is that been the strategy to diversify outside of fixed income? Are you looking to continue to do acquisitions? What's the strategy going forward?
It's a good question. We've largely kind of gotten here through organic growth. So we have great technologists, a great scalable business. When I say that we've gotten into the ETF business, it's essentially, the same technology that we used in a lot of ways from way back when. So there's a nice scale to our business. That being said, over the last couple of years, I wanted to make a point to say we can do like real acquisitions. We've done 3 acquisitions over the last 2 years, all of them having gone very well. From my perspective, it's always about, is there a piece of technology that we could acquire that's more difficult to build? Or is there access to a network that we can get from an acquisition where we can deliver technology into that network? It's always about the concept of kind of driving behavior change and really the evolution of kind of paper markets to electronic markets.
Interesting. You mentioned that versus accretive or something like that.
Yeah.
It's got to be additive those ways?
It's got to be additive. I mean, I feel very strongly in the kind of the fuel behind our organic businesses. Phone trade business still occurs in our marketplaces all the time. And so we have a lot to do, and we're a focused company, and so we're very selective when we think about M&A, but it's a part of our playbook for sure.
You talked about the growth that you've experienced and market cap about 35.
About not quite 35, getting there. We're working on it.
Aspirationally 35.
Aspirationally
okay.
35.
And the stock, you talked about the IPO, but it's done particularly well over the past 2 years. When coincidentally or not, you've been the CEO. Why has the stock been going up besides just your great leadership?
I've been at the company a long time, so it's actually my 25th.
Right, but you've been the CEO though only for a number of years.
True, a long history of being the president of the company. It's an interesting transition to go from president to CEO. Lucky to have a great board, a great controlling shareholder with David. We've caught
David Schwimmer.
We've caught a great environment for our business in a lot of ways. So I kind of describe it this way, like debt markets have obviously been growing the past bunch of years. In general, the central banks are not buyers in our market. When the central banks play very active roles, it tends to kind of muzzle volatility, which is not perfect for our business. And the speed limit around transactions has kind of risen over the last few years, and obviously a combination of the geopolitical headlines, the cadence of volatility in the market has been good for our business in general.
Yeah, but what about higher rates? What about the rate environment, and how does that impact your bottom line, up or down?
Higher rates are good for us. Really what it is a cadence of volatility in the marketplace that tends to be quite good for us. And obviously, when you think about, the last couple of months, it's been about volatility, but it's been about, the market functioning quite well inside of a volatile world. And, we're well positioned around that and have done quite well. I kind of describe it this way a little bit. Tradewebs had a great business for a while, a leadership position. We have no monopolies in anything that we do. And my instinct is, and when I say that, what I say is our clients always have the ability to do business away from us. And I think as a company, most likely that's made us better. And this is a point in time, from my perspective, given kind of what we do, that concept of the one-stop shop, the market's becoming more linked, we're at a position where we're really kind of flourishing.
Well, what about competitors? I mean, who else can you go to?
So there's this company, which I know you know of, called Bloomberg. And they've been kind of side by side with us from the very beginning, in a way that you would understand very well. Their primary focus, and they're an amazing company, has always been really, the terminal side. And we found kind of avenues to not just compete with them, but in some ways, really flourish. We have a leading market share position in all the markets that we're in, so we've done pretty well. There's another private company that focuses mostly on credit, a public company called Market Access. they're a little bit more siloed, so we felt like we can compete well with them because, again, the markets are linked. And so the concept of our clients doing a credit trade, but as you know, those trades are based on spread and linked to treasuries, we're able to be pretty thoughtful and hopefully innovative and do things that add a lot of value to our clients.
You talked about volatility over the past couple months, Billy. Obviously, that is connected to Donald Trump being president.
Yes.
And I'm wondering if there's anything coming out of Washington, either positive or negative, tariffs, for instance, that affect your business.
There's a lot coming out. We all have to kind of follow the headlines all of the time. And so if we're used to looking at data and things like CPI, we have to understand that some of the stuff that's happening, we're not going to really see the impact on that for the next kind of few months. That being said, the headlines in and of themselves is keeping the markets a little bit off guard. And so we've seen, a lot of volatility, for example, in something as straightforward as the 10-year note. And my instinct is when you think about just the concept of sort of geopolitical risk, the nature of our president and his willingness to make headlines, we're going to be in a little bit of that volatile environment and the cadence of volatility for a while.
Right. Can you give us a real life example of someone on Wall Street, a professional, using Tradeweb? And by the way, is this only for institutions, or could individuals trade well?
We have a really great kind of well-known institutional business. We also have a wholesale business where banks trade with each other and almost offset the risk that they are taking on by making markets for their clients. And we also do have a retail business that focuses mostly on the RIA world and the wealth advisor world.
Right. So what would be the biggest piece?
So the biggest piece is the institutional.
Okay. So how would that work? What would be kind of an example of a customer using it, and exactly how?
So a really kind of, probably big personality portfolio manager at PIMCO will come into the office, most likely at PIMCO probably about 3:30 in the morning New York time. He'll look at screens from Tradeweb that show two-sided markets, for example, in a marketplace that's very important, for example, like the TBA mortgage market. And he'll take his mouse, he'll click on a price, and he'll send a electronic inquiry to Goldman Sachs, Morgan Stanley, and JP Morgan, and then within milliseconds, those banks will compete to do the trade with that nice gentleman at PIMCO, and then the person from PIMCO will do the trade, and then all of that transaction in hopefully a very seamless way will flow into that person's risk management system.
Right.
And we've created that very interesting efficiency. So maybe way back when, that person at PIMCO wouldn't have been able to see where the market was. He might have called, our friend Sherman McCoy to try to get a price from the trading desk. They would have gotten a sort of relayed price back, and then he may or may not have done the trade. And we're talking about big bid asks and a lack of transparency in the market. And a lot of that has changed.
Yeah, I think Sherman's hung up his spurs too, by the way, Billy.
I think there's a good chance.
Yeah, I want to ask you about, there's a big move lately of privates and retail investors, putting those two together.
Yeah.
What is your take on that?
It's interesting. I mean, the credit market is really like the kind of frontier in a lot of ways around that. And I think the thought process is the blend around kind of how we think about public credit and private credit is changing by the minute. From my perspective, there are a lot of kind of thoughtful firms around the evolution of the private market, maybe at the top of the list. In a lot of ways, Apollo has been very, very strong about ultimately wanting a more transparent sort of secondary market in private credit that feels more like the secondary market that currently exists in some of the public credit marketplaces. So it's an interesting evolution. My instinct is that the private credit market is going to continue to evolve into a much more efficient place.
And your service, Tradeweb, works for both public and private credit?
Right now it's public credit,
right,
because that's really all
right.
the transparency is.
So is that the next frontier
We're
for you?
working on that big
Getting
time.
into private credit?
It's the right partners. We've been a company that has really sort of partnered with the community to build out a marketplace that works. And I think it's figuring out the right partners in this next evolution of private credit. It won't be necessarily easy. We have a lot of history with, again, these kind of paper markets that can be pretty gradual and pretty slow moving into transparency. The history around Tradeweb, in a really interesting way, is that there was always a little bit of resistance around what we do. Transparency and efficiencies, like, no thanks. We make money in a little bit of the shadows of the market, in the back alleys of the market. So there's always been a very kind of interesting push-pull around how these markets ultimately evolve. I think in a really interesting way, a firm like Citadel has been very loud about their presence as a market maker on the security side in fixed income, and they're playing a pretty large role in credit and also the interest rate products in terms of being a more aggressive participant in the evolution of electronification, particularly since they bring in so much experience because they're such a strong player, as you know, on the equity side and the equity derivative side. So there's a lot happening.
Yeah. As a public company CEO, you talk to analysts, people on the buy side, and I'm just curious, what do they want to hear from you? What are the questions they're asking you, both sort of longer term and maybe now specifically?
Where's the growth going to come from?
Mm-hmm.
And they're always trying to understand sort of what's the evolution from a marketplace beginning to go electronic, and sometimes that can be, the smaller size trades, the more kind of simple type of transactions, into what I would describe to you as risk trades or more complex trades. And what I've found myself over the past few years is really like the investor base has become much more astute about what Tradeweb does. And I remember very early on, kind of on the roadshow before we went public, really having to describe, like, this is how a transaction occurs, this is what a mortgage bond is. Like, there were, it was a pretty sort of interesting moment where we were really almost teaching the investor world kind of what we do. And now we're getting extremely astute, educated questions, not surprisingly, because the investor base has gotten, so much smarter about our business and what we do.
Do you have a take on rates and Federal Reserve policy and what Jay Powell should be doing?
No, my only instinct is I have a very strong, view that Scott Besson is quite good. Mm-hmm. And it feels like he's, pretty fixated on the 10-year note and wants rates lower. And obviously they're going to have to manage through that process, and we'll see what happens in terms of how the tariff story unfolds. But my instinct is he's a real strong sort of almost market practitioner.
Right.
And he's been pretty clear that he wants a sort of a free rate that moves lower. And I think he's got a lot of clout.
How do you keep up with technology in your field?
You have to be extremely oriented all of the time to both spending the money the right way on technology, and at the same time really spending the type of time and the quality with your clients to understand that what you're building for them will work. And I say this all the time, we have some good ideas that come kind of into the Tradeweb halls and then come into my office. We have a ton of really smart people that work at the company. A lot of times our best ideas come from our clients, and that's an important principle, because when it comes from your clients, a lot of times your hit rate in terms of how you build technology for your clients tends to be much higher. So we're an external company. We really try to understand our clients really well. And then I think when you go with that premise, you tend to build technology in a more efficient way.
And final question, Billy, why should investors stick with your stock if they already own it, or buy your stock right now?
We're in the early ages of, early innings, I should say, of a one-way train towards increased transparency and the electronification of these markets. We're not going back in time. We're only going forward from here. And my instinct is, this is the right time, given a lot of events, to really get behind the continued efficiency and transparency of these markets.
Billy Hult, CEO of Tradeweb, thank you so much for joining us.
Thanks very much for having me. Appreciate it very much.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.